Hey guys, welcome to this video. In this one, I'm just going to teach you a bit about why markets and crypto markets, what we're looking at today, stall. Now, the reason why this happens is quite simple, and it comes down to what I always say to my academy members and my students. The market moves in stages. If you look back just previously, let's say we'll take it from, let's go further back than that. You've got February 2021, that's just over 2 years ago. Now we're in 2023. You can see this initial move up, this push up is followed by a minor pullback there. Okay, so that is your first stage. You've got your initial hype, and then it comes down, and then it hits key support and returns. Now you get the same thing again on a slightly larger scale, and you can see that over at this point when we come right up, and then you get price rejection with this candle wick, and the price just collapses down. Now that goes on and on, as you can see. It happens again here, right? Market up and then market down. And, the same thing goes on until we get into a downtrend. Now, what's interesting is in the downtrend, it's just quite the opposite. Okay, so you have your pull down, and then in its simplest form, that becomes your upside. And then that got very, very well extended with all the inflationary issues and people getting scared and pulling their money out, right? So your stages you can see quite easily: up, down, up, down, up, down. And that's why you need to trade the market as an oscillation. It's just because if you're not doing that, then you're not trading with the natural flow. Of course, again, that's what I teach people. If you want to get on board with myself, by the way, go under this video and get started. It's absolutely free. But yeah, you can see the market's moving in stages here. So we don't need to change our perspective at all when the market goes sideways, because although it is going sideways, we still need to retain that overall attitude that we're going to trade it in stages. The market going sideways is just another stage. Although it's not uptrending or downtrending, or at least not really prolifically, if you like, it doesn't matter. It's still a stage. Sideways movement is still a stage. And you can see that stage because all of these pushes up get rejected to the downside. Now, where that pulls you at this point is the current weekly candle wick we're seeing, where you've come across from that previous zone here, those previous highs, and you've touched above, you've had your market reaction and previous price action. And again, the stage continues because you're hitting up to the upside of the sideways channel, and therefore, you're looking to come down slightly. Now, that's why we don't buy these high levels, because we're trading it in stages. We're still in that sideways channel stage. We haven't broken out of it. And if we refer back to key PA, you can see what's keeping you there. And it's all of this going on over here. Okay? So again, when the market stalls, it's a stage. It's a stage of the market, and we want to trade it accordingly. We don't want to buy at these highs. You can see the price got slammed down. I put that in an editor's pick. I updated it constantly. The only time you want to buy, if you have to buy crypto and you're a fan of it and you want to trade it, is if the market comes lower, because you're then trading in the move. Okay, you're trading to the long side within that sideways channel, and you're trading with the market. Okay, if you're buying at these highs, you're not trading with the market, and you're not trading with the market stage. That is a sideways movement. And that's why you get channels formed, because it's another stage. You're either going up, down, or sideways in any market. And all three of those instances are a stage of the market. Often when there's indecision, people don't really want to know, they're not completely mad about buying something, and they're also not completely mad about selling something either. They just move sideways. And of course, if you're trading the market as a stage of sideways movement, you're naturally going to be in line with what is going on. Okay, so this you can see is pounded away so many times. That's because the stage is a short side fall. That's the stage you're in when you get to that point. So it makes no sense to suddenly change your mind and start buying. And that is why you've got that move away. And that's why we'll only look lower if we come down much further. So thanks for watching, guys. As I say, if you want to get tools like this and more, I teach everyone in my academy. Go and get the free training underneath. It'll take you to another page, and then get on board with us after you've learned the free training. and you can start trading the market in stages as well. Thanks for watching, guys. See you in the next one.